Good evening, everyone, and welcome to another episode of the Proventure podcast, the show where we talk about real estate, business, and everything in between. And today we have Adriano Buono sitting again with us in studio. This time a little bit different because the last time we sat, Adriano was actually in a physical studio, but since then we switched it to the online format, which is still pretty cool.
Yeah.
It allows us to, have more guests from all across North America. But, I wanted to invite you in. I wanted to catch up, see what's been going on since the last time. So let's get into it, and let's talk real estate. Let's talk mortgages. Let's talk about Canadian and US financing. Let's talk about it all. Before we get started, today's episode is brought to you by our sponsor, Mercurio Inspections. Mercurio Inspections is a trusted and experienced inspection firm known for their thorough professional approach and their attention to detail. They specialize in providing clear and easy to understand reports that help buyers, sellers, and investors truly understand the condition of a property before making any important decisions. Their commitment to transparency, accuracy, and reliability makes them a valuable partner in any real estate transaction, and they have been our trusted partner since 2019. So let's get into it. Adriano, what's going on?
Not much. Well, thank you, first of all, to Mercurio Inspections for sponsoring the podcast. It's always very appreciated. I know their work is very, very good. I only hear good things.
Yeah.
So we thank them for the help.
My go-to.
I want to ask you something quickly. I think this is my third podcast appearance, and I want to know
if this is your fourth.
Else has been on the podcast, whether it's the third or fourth time. Am I the leading guest?
You're the leading. Yeah, you're the leading.
That's not bad, eh?
You're the leading. This is your fourth appearance.
Say, I guess, eh?
This is your fourth appearance. We had you on 3 times. Actually, this is technically your fifth because we had you on for 4 episodes in a physical studio and now a virtual one.
Well, there
you filled
we go.
in for Anthony when he had his baby.
Going. Let's keep it going. I don't want anyone to catch this record. I'm on a good run right now. I'm hot.
There you go. So, let's do some catching up. Let's talk about financing, Canadian, US. What's going on in the market? What's going on in Canada, right? How's the Canadian financing market been? And before we dive across the border.
Yeah, well, you know what? It's a good time to be doing this podcast, right? We're December 16th today. So it's really at the end of the year.
Yeah.
It's been, I would say, a year that's a tale of 2 halves.
Okay.
I'm not sure if you've experienced this as well, but I would say the first half of 2025 was very, very active market. It was very, very busy. A lot of people looking to buy homes, to sell homes.
Yeah.
So there was a lot going on. Rates were coming down very, very rapidly.
Yeah.
Bank of Canada started, dropping rates pretty much every announcement from the beginning of the year.
Yeah.
So that was consistent as well. I would say the second half of the year, the vibes shifted a little bit. I think there were maybe a bit more properties on the market compared to buyers.
Yeah.
I think there were a lot of properties on the market for longer than they would have been a couple of years ago. I think rate announcements have been less and less optimistic towards a drop. The Bank of Canada has been, holding rates more than they had been earlier in the year. And now we're at a crossroads, right? So looking in hindsight, we had, 2 very different markets, 2 very different rate environments.
Yeah.
So it's a good time to be doing this summary.
Yeah. I know that the most recent announcement was a week ago, and they held the key interest rate.
Mm-hmm.
So, in the new year, when's the next announcement projected?
Well, the next announcement is going to be the end of January. I don't have the exact day on me. It's going to be probably a Wednesday towards the end of January, the 27th, 28th, around there. There has been an increase in Government of Canada bond yields, 5-year bond yields recently.
Which led to the rates.
Which led to, the Bank of Canada holding rates, and people are asking themselves, well, if these bond yields keep increasing, well, could rates go up? What I could tell you is that, based on, the monetary policy of the Bank of Canada and the interest rates of the Bank of Canada, banks can play with their own rates internally, and that reflects their cost and their profit and stuff like that on rates that they offer to clients. I'd say the biggest banks have actually increased rates in the last couple of weeks, minus one bank. If you want to know which one that is, you have to call me. So I would say it's a very, very interesting rate market. There's the potential for the first time in a while, of rates going up a little bit, as we've seen, in the last couple of weeks. And there is a lot of uncertainty, right? Through economics, through inflation, employment. There's big things going on in the rental market as well.
I find the
Whenever,
rental market slowed down though.
yeah, well, whenever you're talking about, economy and stuff like that, oftentimes politics is also involved.
Yeah.
And the Bank of Canada, sorry, the government of Canada has made some announcements throughout the year looking to, decrease the number of non-permanent residents in Canada and limiting the number of student visas for people coming to Canada. So that's really limited demand for rent. And it's almost putting a downward pressure on rents. So we're not quite sure exactly where that's going to go or how long that's going to last. But it could be, in the coming years, that we do see rents start to decrease, and by consequence, prices, especially of condos that are mainly, used for rental. Let's say a downtown condo, or a multi-unit. You could see those prices start to come down a little bit, based on the decrease in rents and therefore the decrease in profit from that building, right? Or revenue from that building or from that unit. So I think it's a very, very interesting market. As you know, and as I know, there's still a lot of opportunities. What's very important, as we always say, is one, knowing what you want and, really thinking about your decision, making sure it's the right decision for yourself, and for your wallet. Budget is also very important, right? So making sure that, hey, this payment that comes every month, along with whatever else comes with, a mortgage payment or owning a property or insurance, taxes, stuff like that. What's the impact on my budget? Can I sustain this short term? Can I sustain this long term? Am I still keeping the same lifestyle, the same habits? So it's all things that go into decision making. But there are still a lot of opportunities out there. It's just about, again, really knowing what you're looking for, really being sure, and going from there.
I mean, what's the qualification like for like an average Canadian couple looking to purchase a home? Is there like hurdles? Is there restrictions? Is it, like how difficult is it for the average Canadian couple who
Right.
wants to buy a home?
Right. So I always say that the general rule of thumb is that for a person or for, multiple people who don't have many debts, they could typically borrow about 4.5 times their yearly income. So if a couple, is making, let's say, a 200,000 combined, you could safely say if they don't have too many debts, they could borrow about 4.5 times that, excuse me. So you're looking at a mortgage amount of around 900,000 plus your down payment, then you'll get your purchase price, right? The biggest hurdles I wouldn't say are due to salaries. The hardest part of being able to purchase a property, as you know, is saving up for a down payment. Yeah. And whether that's a minimum down payment of 5% or, a conventional down payment of 20%, that's the biggest hurdle. It takes the most time.
Right.
But I would say the biggest hurdle is really monthly payment at this point. And I would say that even, that couple who could, in theory, have a mortgage of $800,000 to $900,000 and buy the property at $1 million, is it really what they want to do? Paying $4,000 to $5,000 a month on their mortgage. And again, if you average out the taxes they're going to have to pay and insurance, and then some little renovations here and there, and spending every Saturday morning mowing the lawn and stuff like that, right? So I think the biggest hurdle, I would say, is really that monthly payment, which I alluded to earlier, is the most important. And people aren't willing right now to make the sacrifice, and they're very entitled to that, obviously, right? So I think people are opting, to stay on the low to mid end of their borrowing capacity.
Right.
Keep their lifestyle very similar and not put that pressure on their budget and, potentially struggle to make ends meet at the end of the month, right? Which is all great decisions. It's decisions that maybe people didn't make a couple of years ago.
Yeah.
So there is that, learning as well. But I would say that's the biggest hurdle right now, because there are properties on the market, again, at many different price points. Correct me if I'm wrong, but there are, depending on the property, a lot less offers to purchase properties. So there's a lot less overbidding.
Yeah.
Price is still an issue. And especially, we had alluded to earlier that there might be a downward pressure, for condos or maybe for multi-family properties where there are rental income components. Single family homes are still rapidly increasing in value. They aren't building more of those for the most part. And if they are, they aren't always in an urban center or whatever it may be. So those are retaining their value very well. But in saying that, it's forcing, or it's keeping property prices for single family homes where they've been or on the same track as the last couple of years, which is always increasing.
Yeah. I mean, the market definitely, like, there's less bidding wars. It depends the product, depends the price, but I think it's been less common in the last 3 to 6 months, in Montreal and everything. So, now, so they just announced that they're going to hold the key interest rate. What do you think the next announcement's going to be, if you had to take a guess?
I think it really depends. Now, given we always do tend to follow the US a little bit,
Yeah.
there are US unemployment figures which are going to be coming out in the next couple of weeks, and that could decide what their rate announcement's going to be on their end. So that could have a little effect on our side as well. I think it's too early to tell. We're missing, data from November. So in January, by the end of the January, they'll have that info and make a decision. But right now, I think they're going to be erring on the side of caution. So it wouldn't surprise me if there was another rate hold, especially with, the way the banks have been acting the last couple of weeks and even increasing their rates, internally.
Yeah.
So I think, again, starting the new year, it's going to err on the side of caution.
Yeah. I think, I definitely think there's a pattern though. You know what I mean? And they can't always drop it, right?
Yeah.
You know
No,
what I
for
mean?
sure.
You
Absolutely.
drop it
Well,
two,
and
three
there has to
times, they hold 2 times, right? Like they
And
can't.
there has to be also an economic reason to drop it as well. And
Yeah.
sometimes that's where politics get involved, especially in the US with, a certain president threatening a certain person in control of the interest rates, telling them they have to come down, right? But there has to be an economic basis for whatever decision is made, right? And it's not always, the best for consumers. It's not always the best politically, but the economy is its own market, right? And it's very important to keep that intact as well and make decisions that best represent the market.
It's interesting because the majority of Canadians are suffering, right? We're struggling, and make $100,000 and they could barely afford to pay their rent, right? So I think that those who are able and capable of getting a mortgage, are few and far between compared to 5-10 years ago, right? And even if, for example, you qualify, you say, if a couple in a household makes 200,000, the average Canadian household makes
Yeah,
100,000,
absolutely.
right? The average, 4.5 times that, you're saying about 500,000. But then the flip side of that is 500,000 is a decent budget in reality.
Yeah, absolutely.
But the product that you get now for 500,000 versus 5, 6, 7,
Yeah.
8 years ago, it's a different product. And 500,000 in 2018 would have get you a massive, 3,000 square foot house, 4 bedrooms, 2.5 bathrooms.
Mm-hmm.
Now 500,000 gets you 3 bedrooms, 1 bathroom. So it's interesting, and I think that eventually there's going to be some sort of shift where it all starts with housing. They got to build more housing, right? That's the reality of it. Until we build more houses, we can't really see these values stabilize
Yeah, and that's the
or come
thing is
down.
that there are no plans to really build single family homes. Like there are
No.
government plans to build, exclusively rental units, which again is another reason why there is a downward pressure on monthly rents, and it could have an effect on condos or multifamily properties, as we mentioned.
Yeah.
There's no plan to build really single family homes from the government side.
Yeah.
And builders are still facing, the same issues that they've been facing forever, but especially in the last couple of years with high cost of materials and government red tape and zoning laws and this and that and environmental laws and whatever it may be, that they're foregoing building, some projects just because it's too difficult or it's too long or the return on investment isn't there.
Right.
So
Right.
that's also what's causing, this bubble which we've been in for a while. And now, given some of the problems are being rectified, others aren't, and that's where you're seeing a lot of the volatility as well.
Yeah. Yeah. I think that you're right. Nobody's really building single family homes, and that's the reality. To build a single family home, you need to literally build it yourself, right? Like you can't, it's, like it's a developer is not going to buy 2,000 plots of land and build 2,000 homes. They're more, inclined to purchase a plot of land and build 500 condos, or, an apartment building, or, like a condo project that I just started working on, where these developers, for the first time in 30 years, they've been building real estate for 30 years. For the first time in 30 years, they built a rental project, 554 units, right? It's a condo. It's not that they built 554 single family homes. So I think that when it comes to single family homes, build 2,000 of them is, it's far fetched, right? You'll probably get a developer who will buy 20 lots and build 20.
Yeah, because there
50.
are, some new developments. There just aren't the amount that are
Right.
required, let's
Right.
say.
like, in the West Island, Montreal, they build single family townhouses,
Mm-hmm.
which people don't really like, but still a home. If you
Sure.
ask me, it's still a single family home.
Agree.
And, they build 100, 150. But how many dwellings are we missing across Canada?
Yeah, absolutely. Well, that's the thing
You
too,
know?
is that demand is slowly coming down. And it's maybe a question that a lot of developers are going to ask themselves as well. Now, if we're building, let's say, you know, just rentals,
Yeah.
and if that rental demand comes down, well, are our numbers off? Are our calculations off? Did we, potentially drop the ball a little bit by not, either selling those units at the drop, given there is still a decrease in demand of new construction condos as well? And
Yeah.
in Canada, the market trends start with Toronto and Vancouver. And there's
Yeah.
a lot of pre-construction condos where buyers have been taking hits and builders have been taking hits. And that's potentially soon to come to Montreal as well, even though the Montreal rental market's been, I believe, the strongest in Canada in the last couple of years. That being said, builders might ask themselves the question if those resources were misplaced. And, at the end of the day, hindsight always being 2020, would have been better to, on those same, lots, build, 50, 100 single family homes, however large they are, townhouses, whatever it is. Would the return have been greater? Would the demand have been greater?
Yeah.
And that's potentially where, if we get those answers, then their mindset might shift.
Yeah.
So it remains to be seen. But that's why I said, at the beginning, it's very good that we're having this conversation, because a lot of things have been happening. A lot of things have been happening very quickly. It's almost hard to keep up sometimes,
Yeah.
but a lot of things have been happening, and we really have to keep the people informed, and at
Yeah.
the end of the day, people ask me all the time, Adriano, is it a good time to buy? And I ask them, why are you buying? And they're like, well, I need a place to live because I just got engaged to my fiance and we want
Yeah.
to start our life together and, buy our family home where we're going to have kids in this home and we're going to get a dog and he's going to play in the backyard and we're going to put a pool in one day and this and that. And if there's something that, you could buy, that you have the capacity to buy, and to get a loan for, and it fits your budget, then it's always a great time to buy, because that's not just numbers based, in terms of a return on investment or whatever it is. You need a place to live and a place to start your family and start a new chapter in your life.
Yeah.
Right. Is it a good time to buy, potentially a multifamily unit with 2, 3, or 4 doors? Or is it a good time to buy a condo downtown? That's where I would see potentially there's a bit more risk.
Especially downtown Toronto.
Oh yeah, downtown.
Especially
Well, you know what? Now the market's kind of dipped over there. Now it's even a
Yeah.
little bit interesting, if I could be honest with you.
Yeah. Well, I follow that. I love Toronto as a city. I go
Sure.
4 or 5 times a year. And I saw things online, about like the market in Toronto, and essentially like builders are giving like these insane promotions. And I saw one saying 0% interest on, what was it? 0% interest on a mortgage for a 1-bedroom condo, a developer promotion. That is insane. That is insane. Like, it's a mess. Like, Toronto was too much too fast,
Yeah.
and people are losing their shirts. People who bought those condos as an investment. Maybe I'm a little bit biased. I think that I bought one condo investment, and I think that you have to really buy right for the condo investment to make sense, or for the condo to make sense. Maybe it made sense 5, 10 years ago, when it first started booming in 2015, 2016. But, as of the COVID era, it stopped making sense with the inflated prices. And like people in Toronto are seeing that. People in Toronto are seeing, like there was this poor guy on the news who, was all in for a condo at 880,000, couldn't close because he couldn't qualify, had to assign his sale for 550,000, still had to take out a mortgage with the developer for the balance, and that's a nightmare because the average real estate investor is not a mogul.
Absolutely.
They're a regular family who want to put a 1 or 2 buildings aside for their kids to have something with, hardworking, and to be going through that is terrible, right?
Absolutely.
So, but I mean, I hope that, like, I think that when I got into real estate, there was all these incentives and all these programs for single family homes and buyers. And, I keep talking about this, but 10 years ago, when the condo market was taking off, you could have bought a condo with $1,000 down payment.
Yeah.
And there was a promotion with a certain bank here in Quebec, the Green Bank, who would front the 10% down or the 5% down. And it was, it really helped people get their foot in the door, right? So I hope that eventually something like that will come back. But
Yeah.
I think that for something like that to come back, there has to be an influx of housing,
Yeah, absolutely.
and the supply has to outweigh the demand.
For sure. Well, given, right? That's never the point you want to be at, right? In a pure ideal world, you want to be at a market equilibrium,
Yeah, balanced.
right?
Yeah,
Of course. That's rarely how economies work or markets work, right? And, oftentimes, as we've seen the last couple of years, for example, demand outweighed supply.
yeah,
And now we're getting a little bit closer to the market equilibrium, right? And in some cases, like in a condo market, well, there's more supply than demand.
exactly.
Right. But the reason for that increased supply is, well, because, developers tried to benefit off that increase in demand a few years ago where there was maybe lacking a supply. Maybe they overbuilt.
Yeah,
That's where we're seeing, the condo that was, sold a few years ago pre-construction at 880 is now 580. Right.
yeah,
Because the one next door is also empty and the one upstairs is also empty and the one across the
yeah,
street is also empty.
yeah,
All
for
right.
sure.
So it's an interesting market. Again, usually, Montreal will follow Toronto to a certain extent. Maybe not immediately. It might be a little bit different as well because I mentioned the rental market in Montreal has been quite strong the last couple of years.
Yeah.
But again, with, government policies and politics in play, like I mentioned earlier, I wouldn't be surprised if there was a downward pressure on prices in the coming years. Rents, I mean.
Yeah. Well, I mean, with that being said, we're going to take a quick break from a word from our sponsor, and we'll be right back after the break.
Inspections. Mercurio is a trusted and experienced inspection firm known for their thorough, professional approach and attention to detail. They specialize in providing clear, easy-to-understand reports that help buyers, sellers, and investors truly understand the condition of a property before making important decisions. Their commitment to transparency, accuracy, and reliability makes them a valuable partner in any real estate transaction. Our trusted partner since 2018.
All right, guys. Welcome back to the episode of PVP Podcasts. We're with Adriano from Group Orbis. We're talking real estate financing, Canadian, and like first half of this episode, we spoke about Canadian real estate, but
Yeah.
let's take it across the border a little bit.
Amazing.
I mean, obviously, you work for a brokerage that's capable of financing in all the states,
Yes,
and I know that because you're currently working on one of my U.S. financing,
I am.
and this has been a trend
Mm-hmm.
the last 5 years or so. I think that shifting the focus from the first half of this episode where we're talking about home buyers in Canada and, regular investors, but I think that the trend has been from investor-minded people,
Mm-hmm.
right? I had someone on the podcast a few weeks ago who, his piece of advice was stop thinking like a landlord and think like an investor, right? And what that meant was, it's two different things. A landlord will figure, hey, I could save $1 by going to the property and changing the toilet myself. Whereas an investor will be like, I could save time by hiring somebody else to do that.
Sure.
Right. So there's an influx of Canadians going down south. I met online with one of them from the GTA last week about this. He's investing in Texas and stuff. But what's like for someone who's on the fence about going down south across the border because political views or
Sure.
they don't like the leader or, these things, what would what would be one piece of advice you'd say you'd offer them?
Well, the first thing I would say is that no one's forcing anybody to do anything, right? And again, everyone has, different opinions and different views, and they're very, very entitled to them. I think, if you're looking at things as an investor, it means you're looking at things from a numbers perspective. And numbers are neither here nor there.
Right.
Numbers are numbers, right? They're concrete. There's no feelings in numbers. So if you're really an investor and you come across a property and you run your numbers, you run your calculations, and if you like the numbers you see, then why wouldn't you jump in? You know what I mean? If you're more of an emotional investor and you invest based on this and that, maybe it's not the best investment for you, or maybe investing isn't even for you, right? If there's other things that you're looking at apart from, hard facts and numbers, and that's totally okay.
I just want to interject. I think that if you're an emotional investor, you shouldn't be an investor because
For sure.
emotions do not make good business decisions.
Yeah. No, that's absolutely it, right? And again, everyone's entitled to whatever opinion or emotion or whatever it is, but you have to understand the reality of what you're getting into. If you're an investor, you're looking at returns on your investment. Now given there could be, different factors that may influence that return, and that's things that you can take into consideration, right? But if the numbers are there and all your questions are answered and something's a good investment, well, then you should invest. If something's a bad investment, you shouldn't invest. And there's
Yeah, I
always
mean,
something, hindsight and stuff like that, right? Where in 20, 30 years, you might have had a good inkling or a bad one. And,
yeah.
that's life, right? But numbers are numbers, and no world leader or person or whatever can change those numbers.
No, and I think that, let's take the file that we're currently working on finalizing for my investment. I mean, we're purchasing a duplex at 135,000 US that could rent conservatively for $2,000 a month, could rent realistically for $2,200 a month, and optimal at $2,400. Like, those are insane numbers.
Absolutely.
Like first of all, at 135,000, yes, it's US. People say, yeah, but it's US. Yeah, but the rent is also US too, right?
Absolutely.
And at 135,000 in Canada, you don't get nothing. And if you do
No,
get something,
you can't even buy a shack in your backyard.
no.
Yeah.
You maybe get a mobile home in like a little area, but here's the thing. If you do get something for 135,000 in Canada, it's in a town where there's, maybe 4 or 5,000 people, not
Sure.
high rental demand, not high purchasing, like demand. So I think that like when we look at it from an investment standpoint, it just makes sense. Even at the bare minimal, it rents for $1,000 a unit. Here, the average price in Montreal for a duplex is 600,000.
Yeah, absolutely.
And maybe you'll rent it, $2,000 a unit if they're 3 bedrooms, but it's still 600,000. And your $4,000 a month is, it's almost 6 times the purchasing price for 2 times the revenue.
Yeah.
And when I look at that, and then there's the other factor, right? Financing just seems to be a little bit more available in the US, where there's thousands of lenders. And in Canada, you're limited to 5 big banks, right? Maybe a few lenders, but I think that for those, like, I know people who have went across the border and they've accumulated tenfold what they've done in Canada. In 1 year, like I know this one gentleman, I had him on the podcast a while ago, and he's currently a mindset coach. And he was telling me, he's like, in Canada, I was able to purchase 2 duplexes in 1 year. In US, I was able to purchase 20 duplexes. Why? Because there's no, the DSCR loans are infinite, so I think that, but it takes a special type of like it takes a full throttle investor.
Yeah, absolutely. And again, there are, when you're talking about, cross-border anything, there are risks involved, right? You are putting your money in an investment of which, in a system that you're not used to, in a country that you don't live in, which can have different rules and different laws and different banks and stuff like that, right? So there is, a more increased risk, and there is discomfort that comes with that.
Yeah.
And it goes back to the point of, no one's forcing anybody to do anything. My whole goal, and obviously we're speaking about your file that we're doing together, and we're going to wrap up very, very soon.
We better.
My whole goal is to educate people on what is possible. And if it's something that, potentially interests you and you want to expand on that conversation, we'll book a time slot and I'll go over from A to Z what's possible, what's not possible, what they look for. I'll even go on, Zillow and pull up some listings, and I'll calculate, off the cuff, more or less, what you'd have to put as a down payment, more or less what your total cost is going to be in terms of, mortgage, taxes, insurance, etc. What your closing costs are going to be, roughly what your return on investment is going to be, given the rent at market rent. And then you could, see for yourself if it's something that potentially interests you, or if it's something that potentially throws you off and you rather invest elsewhere, which is okay. That being said, when you look at that market and you take into consideration a duplex at 135,000, getting top dollar rents versus a duplex at $600,000, $700,000, $800,000, not getting top dollar rents. That's what I meant earlier when I said, if you look at the numbers, if you look at the bottom line tells you all you need to know.
Exactly.
And it just depends on exactly what you're looking for, what you're comfortable with, what type of investor you want to be.
Yeah.
There are people, who want to buy in different countries, but not really to be investors, for leisure, right? And have a vacation home and stuff like that. And that's okay too. Now, there is a bit of a different analysis to be done because there might not be that consistent rental income coming in. More is going to come out of pocket.
Right.
Is that something that you're prepared for or not, right? But that being said, if there is an interest, I'm more than happy, and I do it with a lot of clients and a lot of partners as well who really understand the numbers and who understand markets and how they work. I do a deep dive and really take a look at what's out there, what's possible, the pros, the cons, and then it's more enlightenment to make a decision.
Right. So you have a license in the States, correct?
I do, yes, I do. So my company, Orbis Mortgage Group, is based in Canada. We're actually a Montreal-based mortgage brokerage firm with offices in Ontario and other parts of the country as well. They opened an office in Boca Raton, Florida, and offered every broker from here the chance to be licensed over there, and they would sponsor you on both sides of the border,
Right.
which is what I did. So yes, my license is a national license. I do have a state-specific Florida license as well. There are some states that are not covered under the national license I do have. However, my company can lend in all 50 states.
Nice.
So if it's not through me directly, through the company, everything's possible in terms of financing U.S. properties. You had mentioned it earlier, right, that in the States, there are a lot more lenders, a lot different policies, and they look for investment from foreign nationals, which is a little bit different from Canada, where foreign nationals are banned from investing in real estate currently.
Yeah.
And have been for a few years. So there is an opportunity in that market. There is a high rental demand as well, more short-term in some places, especially, let's say, a big vacation destination, more long-term in other places where there's, a lot of, whether it's an urban center, where there's a lot of factories, where there's a lot of universities. So really depending on what you're looking for, what your goals are, and how you want your money to grow and how you want your situation to look like, there are many, many solutions available.
Yeah, I think that it just makes more sense. Like there's no way of putting it other than from an investment standpoint. It
From an
just
investment standpoint, absolutely.
makes more sense.
Because again, numbers are numbers. And if you're looking at, let's say, a duplex where you can cash flow maybe $1,000 a month USD, which is about 1,004 a month Canadian, versus other investments which require more capital initially, and you lose money monthly.
Yeah.
Your returns are negative for 5, 10, 12 years or so.
Yeah.
So from a pure number standpoint, definitely one makes more sense than the other.
100%.
And it's also, if you have the same amount of capital and, in one country, that capital gets you one building and the other gets you 4 or 5, then you have that cash flow again monthly on 5 properties instead of 1 versus 1. And, all 5 are positive on one end and the other's negative. The choice is very, very simple, but it's still something that, it's an extra hurdle that you have to overcome, and you have to be comfortable with making a certain investment and being comfortable placing your money in something. You have to believe in it, right? And it's something where there's no right or wrong answer. And it's really, if it makes sense for you and for your budget and for your situation, you try it. The good thing about it is that the barrier to entry is quite low in terms of down payment as well, if you're talking, multi-unit properties and stuff. So it is something that you can try and see if you like and if it makes sense for you. And you'll have all the information needed before you have to make any type of decision to see if it's something you want to explore or not.
Yeah. I think that anybody that I know that's went across the border, it's because they strictly went for an investment standpoint. Like, I'm not saying I wouldn't buy real estate in Canada, just actually I'm in the process of acquiring a small plot of land in Ontario, only because it was available at 85% vendor take back, which was incredible, by the way. 15-year term, 0% interest. Yeah. So it was a small plot of land, 7,500 square feet. You could build a duplex on it.
Sure.
It's in a small town in Ontario, but I paid it 55 grand, put 10,000 down, and you know what I mean? Vendor take back the balance. For me, it was like, why would I say no? Right.
Absolutely.
But, would I purchase revenue property to make money off of? I mean, unless you're really, like in Canada, I find that unless you really find the deal, and you really find the deal, which is like finding a needle in a haystack, and you really, it has to be a commercial deal, right? So 10 units more to really make good numbers. Whereas the States, I find everything is just available in abundance. The population is 10 times Canada's, so are the opportunities. You
Yeah,
know what I
it's
mean?
very fair. It's very fair. Now, given their land size is a lot smaller, but their livable land size is obviously a lot bigger as well, right?
Yeah. Yeah. And look, things like, I came across a vendor take back deal,
Mhm.
0%, 15 years financing. Payments are something stupid like $250, $225 a month. You know what I mean? But you don't find this every day in Canada.
No, absolutely. No, you really have to find something with a stroke of luck.
But in the States, you could find that. You could, there's
Find
just
it,
so much
multiple times on the same street,
on the same street.
sometimes
Exactly.
the same block.
On top of it, like I go right now onto a website that we use, I type in what I'm looking for, and I just type in information. It'll tell me the owner's information, and then it'll tell me how many more properties the owner owns.
Mhm.
You know what I mean? And it's just everything is just available in abundance,
Yeah,
right?
absolutely.
So I think that like that's awesome. You know what I mean? And I think that for an investor standpoint, I think that there's a lot of opportunity out there. So
Absolutely. And again, sometimes the opportunities are right in front of you.
yeah,
Sometimes you have to look for them a little bit. But all that, we can do on our end is invite people to ask us questions and
yeah,
to, we open the floor to any question or conversation, whatever it is. And if it's something that could be of interest, with my experience in terms of financing properties there, with your experience in terms of investing on both sides of the border, we can definitely answer most of, if not every question somebody has. And like we said, build models or look at properties together and really see if there is something out there that corresponds to what your needs are, what your budget is, what you're comfortable with. And you could really start something interesting that could pay you not only now, but for years to come.
exactly. So what's next?
What's next? Well, now it's almost Christmas time. So you and I being Italian,
Yeah,
we'll have a bit of
gotta
pasta
eat.
over the
Gain
holidays.
weight.
We'll
Yeah,
have some panettones.
I just came back from Mexico. I ate a bunch of tacos, man.
Very true. Well, now you have to switch it up a bit. You have to have
Yeah,
some pasta, some lasagna.
yeah, yeah.
So we're gonna start the new year full force. Also going on vacation a little bit, end of January, just to reset
The
uh
madness.
before the madness
Yeah,
restarts.
yeah.
And I think it's gonna be a great year.
Good.
And looking forward to sharing more updates as they come.
Good. So, I mean, I want to thank you again for sitting down with me tonight. And before we end this episode, for anybody who is just tuning in, who hasn't heard your previous 4 or 5 episodes, how could they reach you?
So you can reach out to me, one by phone, 514-456-975.
Amazing.
Loop in my email in the description, Instagram, LinkedIn, however you want to reach me, always available to answer questions, to give my advice and finding solutions.
Amazing. Amazing. Well, Adriano, thanks for sitting down, man. And
Thank you, man. It's
it was
always a
awesome
pleasure.
catching up. Yeah, well, for everybody tuning in, thank you again for listening to tonight's episode of the PVP podcast. Once again, it was brought to you by our sponsor, Mercurio Inspections. And make sure, guys, to follow us on Facebook, Instagram, YouTube. Podcasts available on Apple Podcasts and Spotify. Wherever you're listening, make sure to hit that like, comment, and subscribe button. Until next time, guys, we'll see you soon.